Hello everybody, welcome to Daily Forex Trading Signal. This is Sir Pipsalot. I'm going to try and keep it a little more brief. I'm going to dabble around with uploading this stuff to YouTube, so I got to keep the videos under 10 minutes, so I will attempt to do so. Let's go ahead and move in and preview review Wednesday the 21st and preview Thursday, January 22nd. Alright, on Wednesday we had a slew of UK data that really didn't mean a whole lot, came out close to expectations, but the big thing that came out was the Bank of England minutes, and out of the minutes, the language seemed pretty reassuring. In the Diamonds room, we looked at it, and we saw that they were being very responsive to helping to prop up the economy. There was commentary along that nature. The vote count was 8-1, with the one dissenter being Blanchflower looking for a even larger cut than what was actually voted upon. So all of that, lately on interest rate statements, currencies have been rewarded for their central banks showing a lot of responsiveness to the crisis and to the problem, and opposite to the old way of thinking, lower interest rates means weak currency. In this case, when cutting is what needs to be done, people are actually giving currency strength when it's shown that they're doing the right thing. And I'll show you the chart real quick. Initially, there was a weird knee-jerk down that kind of worried me, so we waited for it to come back up. We got in long at 37.65. And took it up into the 30.18s. Nice 40 pip trade there. Eventually it wiggled around, did some other stuff, went even higher. My initial target was 38.70, which it hit almost right on the dot. But when I saw it was coming back down here, well below, it looked like it was going to pull back quite a bit below 138. I got us out the second portion right here in the room. Initially we got out here. No, I'm sorry. We got out right around here, came up, started coming back. I'm like, uh-oh. So we got out here. Eventually it went up, but we took our 1% out of the market, and that's what we try to do. Moving ahead, there was no other news on Wednesday. On Thursday, looking ahead, really the only thing we're looking to trade is Canada retail sales. Just a quick chart here. Last time it came out reasonably above expectations was 2 months ago in November. Initially we got about 20 pips down. Retrace gave us some trouble, but a few minutes later it started a more material decline. This may have been just right place, right time with a good oil price move, something of that nature, a big U.S. dollar move, but irregardless, the dollar Canada ended up working really, really well. Last time we hit a decent deviation. So I'm looking to trade something similar, about a 0.6 trigger. So what that means is we're going to trade the headline number, folks, not the core. We want the core to come out in the same direction, though. I wouldn't get in if there's a conflict. But with expectations at -2%, if it comes out at -2.6%, I think it's worth getting long on the dollar Canada, looking for 30 or 40 pips or more in the first half hour of the report. If it comes out at -1.4% or higher, I think that's worth getting short on the dollar Canada. Maybe we'll get a meltdown like we did 2 months ago, maybe just a good 30, 40 pips or so to the downside. Either way, I think it's a trade worth taking. We are also getting housing starts and building permits out of the U.S. A lot of housing data out of the U.S. has been really ignored the past 6 to 8 months, so I'm not so worried about it. I will keep an eye out on it if we see a deviation of 50K or more, in other words, 50K higher or lower than the 605 expected. That could definitely have an impulse, that could have an effect upon the markets, but I don't think the probability is high enough to really put something out there and actively look to trade it. I'd rather do the Canada retail sales as opposed to the U.S. housing starts. All right. The one thing I've been doing in most of my videos is talking about the euro dollar. Since the middle of December, I've been talking about the euro dollar being a great position trade sell. Right around here, I'm saying 146 is a great spot to get in a position trade short. Topped out around the 147 area, and started working lower. Let me make this a little more visible for you folks. There, it probably looks a lot nicer. Anyhow, And but by the time it kind of came back, I mean, realistically, if you follow my videos and you took a trade based on my recommendations, you'd be in short probably between 42 and 43 in this region. That's where a lot of people in the diamonds room are short in position trades as well. I recommend if you're a skilled trader to actively manage it, to have several mini lots in. When it has a big sell-off, take profit on a mini lot. When it has a big rally, sell another mini lot. Things like that. Currently, I was looking for a rally into the 131 to 132 range to re-enter a little bit short because I had taken some profits. I'm really not looking to take much profits again until we reattempt the lows around 124. I think we may get there, but part of the issue is oftentimes the 78% retracement is really powerful. We've rallied up, we've pulled back to the 78% retracement right around 129, and we haven't gone through there. In fact, we're kind of on the daily having a tweezer bottom here and a hammer and a doji, so we may be set for a bigger rally. A several hundred pip rally, maybe 1,000 pip rally up to the 139 area, maybe this high here, around 137, the 137.50 to 138 region up here. Zooming on the 3-hour chart, we can see that could be in the cards. All right, I don't know. I prefer to hold the short, but I don't want to get too aggressive. Going hardcore selling in this region when it could have another 500 pips or more to the upside. So I'm going to pull my orders here and just kind of wait and see. Continue to hold it short on position and see what develops. It looks like a lot of the pairs are having some strange issues, specifically yen-related pairs. I will highlight something on the dollar-yen today. We had a huge catastrophic decline that was felt across many of the currencies due to a busted options trade, some sort of options trade action. Options expiration is at 10 o'clock. Apparently there was 6 to 9 billion outstanding. Who knows if that's exactly what caused it, or whether some of the piggybacking took it a lot further. But sold off dramatically in the time. Now, we weren't in the room for an official trade, but on the euro-yen, obviously knowing the cause by the time it was halfway down there and seeing it start to bottom, I called a long on the euro-yen kind of unofficially. I took one in my account from about 112.45 up to about the 115 level. Obviously, it could have gone more, but doing a quick fib retracement of the action, I thought the 68% retracement was a pretty good level to shoot for, just in case it tried to make it up to these lows and couldn't quite do it. So I made like 250 pips, and I didn't even catch the downturn. I just saw it starting to bottom out and let people know, and I think at least a couple people were around and heard about that. But anyways, guys, trying to keep it short here so I can get it up on, so I can try and get a YouTube channel established. It's kind of cool. Come back to us for your daily Forex trading signal stuff. I usually get these videos up in the New York evening, sometime between 10 p.m. and 2 a.m. It's usually when I get these uploaded. If you're watching this on YouTube, there should be an intro video kind of orientating you to what I do in these. And if you like what you see and you'd like to take your trading to the next level, go ahead and join our trading room at forexdiamonds.com, and you'll hear a lot more from me. All right, take care, guys.